Good morning, traders. This is Michael coming to you from Game Edge on Tuesday, June 24th, with our pre-market prep session. As always, here at Game Edge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model that is based on the tick index. You can research that at your favorite investing website. Quick takeaway is the bolded white line here is our cumulative tick, or as we refer to our CT. As you can see, it was in a significant downtrend the past few days, and we were discussing risk-off and cautionary approach to the market. Yesterday, we were discussing what we would need to see turn back up for the bulls or buyers to take control back of the overall market. And it was the bolded CT crossing back above these short-term moving averages. You can review our pre-market prep from yesterday and check that out as we were discussing this, as well as key levels yesterday were respected very well with our trading view and thinkorswim scripts. We identified those levels yesterday pre-market and had some excellent trades intraday via our members and some other people. So bolded CT moving back to the upside above the moving averages. Obviously, we want to see it emerge outside this colored ribbon. Would be a little bit more bullish. You see yesterday that new lows versus new highs on our breadth indicator were about balanced, but new highs edged at the end of the day. Our filtered cumulative tick plus 1,000 minus 1,000 institutional showing institutional transactions was in the 20,000 range, so above the zero line, but not significant. So we'll continue to watch that day over day. And then we saw the cumulative tick obviously take off to the upside towards the afternoon and evening session. So again, we want to see this bolded CT maintain above the short-term moving averages, indicating buyers are in control of the overall market. We want to see this emerge outside of our colored ribbon to turn back on our mechanical portfolio, our P-Trans to PGEX portfolio, which we've had extensive education put out about that if you want to review that also. Colored ribbon, red above cyan, still indicates on a longer-term look-back period that the buyers are in control of the overall market. So takeaway today, we want to see obviously the bolded CT maintain its upside momentum. Obviously, this is a significant gap up this morning, so we'll continue to watch that. Moving on the SPXA, this is our cruise ships. Obviously, these contracts do not turn over as rapidly as the SPXP. So this is larger institutional market players. We want to look at this overall positioning to see how they're positioned. We're still call dominated above and below spot price, as you can see up and down the net delta column. So really no change there via the SPXA. Obviously, institutional speculation to the upside would be around 6,100. That'd be that first level to move above. Again, we're gapping up close to that level this morning, so we'll see how price acts or reacts around that level. But any pullback should be supportive via the SPXA, larger, longer-term contracts expiries. Moving on to the SPXP, we are call dominated above and below spot price. This structure has repaired itself pretty rapidly via either price appreciation and or erosion of the put speculation. We'll discuss that in our GEX ratio here in just a few minutes. But all expiries turned on. Obviously, to the downside, those key levels supportive would be 6,000. We're looking to open around 6080, which is right around the COTMC level. If you're not familiar with that at Game Edge, that is basically where out of the money calls become in the money, and we have a high propensity for possible monetization around that level. We're seeing that pre-market already. So again, 6100 is PGEX to the upside, and that COTMC confluence level. So that may be an area where we see some stalling and monetization via this gap up and overnight holders. And then pullback should be supportive as of now, as we are call dominated below spot price, and transition is very narrow down there at 6,000. We'd want to see the transition start to advance to the upside, indicating call speculation, and speculators are continuing to advance to the upside via their placing of their bets and speculation. So we'll continue to watch that day over day also. Moving on, the SPXP GEX ratio, we've discussed this over the past week. The dropping GEX ratio indicating short-dated call gamma was leaving the overall complex, and we dropped below 1. So we were cautionary for a few days during this pullback in overall price and consolidation. And now we've basically ripped back to the upside. So GEX ratio is at 2. Usually this is an area where we see some stalling, unless we're going to see a significant move to the upside where we'd have to see a large amount of short-dated call gamma or call speculation enter the overall complex very rapidly. So again, this has historically been in peak area where we've seen price appreciation just kind of methodically possibly move to the upside or consolidate. But we'd have to see a large amount of call speculation come in. So again, the GEX ratio obviously has repaired itself via price appreciation, as well as closure of puts and out of the money call speculation continue to come into the complex. So again, this continues to be bullish. Delta balance for the SPXP, again, we were talking about being cautious heading into yesterday early on in the morning, and then we said that we were looking at a possible rebound towards the end of the week via the delta balance, which basically just shows us out in time what market speculators are doing via the overall SPX options contracts. And we saw that rebound intraday yesterday, and now the delta balance is closing back above zero. Right hand plane and left hand plane are back above zero. So all systems go for this on the bullish side here via the delta balance. And then we see on out in time further expiries here for the 27th. As well as the 30th, that delta balance stays at 1, indicating that call speculators are maintaining control of the overall market on out in time. The SPXP 0 DTE is tile turned on here. We are call dominated above and below spot price. You'll see the legend over here. Drunken Sailor range, white is DEX and GEX transition. So again, transition is below us and we're opening and closed above transition. That is always bullish in our book via our overall market plan and how we look at the SPX option structure. So again, to the upside, we're looking at COTMC at 60.85 and then 6100. We've outlined here that the put OI is pretty thin up here, so we're going to see incremental call speculation to flow intraday to start moving up to these areas. Again, most likely we'll see some stalling, I would say, around the 6100. Unless we see that stalling at 60.85 pre-market, which we're already seeing. And then a pullback down towards this PGX level at 60.50, 60.55 would most likely be that first area where we'd look for an opportunity to get involved on the long side on a pullback. And then if we get below 60.50, we'd be looking at 60.25 and then transition down here at 6,000. Again, not anticipating that we get all the way back down to transition, at least at this time, due to the significant amount of in-the-money calls below us that most likely will be supportive as long as these continue to be held. But we do anticipate most likely some profit taking at the open for the overnight risk takers and risk holders of those long calls. Again, 60.50 on the first pullback, 60.25, and then 6,000 at down here transition. And again, we're opening well above the Drunken Sailor range, so really that won't come into play until we get down to the top of 60.25, 60.30. And again, we think that might be a great long opportunity back to the upside if we see a pullback down there. SPXP Net Stack command, again, highest sensitivity. We've already discussed 60.85. That's those out of the money calls. Just a massive amount of in the money calls below us. You see this integral here is almost 3 or 4x those out of the money calls. So again, any pullback should be supportive on the day. Into these overall high sensitivity areas of 60.55, which you've already discussed. And then you see the gamma areas. If we do push above or get above 60.85, we think a quick move towards 6100 would most likely occur. And then obviously charm, significant amount of in the money calls below us. If we're above that 60.55, these will just continue to grow like a balloon. We've covered this extensively in education, so make sure you check that out via our weekend newsletters or our Game Edge framework, which is our flagship options course. But again, these will continue to be supportive as long as we're above 60.55, and then you see the out of the money calls there at 6100. Those might provide a little bit of a headwind, but you see the significant offset here between the left-hand plane and the right-hand plane. So again, above 6100, we most likely could move to the upside if we see a significant amount of intraday call speculation via our vol-m command, which is our intraday tool to indicate where the massive market participants are transacting overall SPX options contracts. All right, so moving on to our game plan basically for today, just really quickly again, we've seen some stalling around that 60.85 level. I think it's important to mark that out, that if we get above 60.85, then we'll test 6100 pretty rapidly. Pull back to 60.50 would not be unlikely. You see that's pretty much a pre-market and post-market technical area last night that we kind of consolidated around before we moved up. So that would be a pullback to the 60.50 area, and then 60.25, 60.30 would be the top of the Drunken Sailor range. And then we see the transition levels down there at 6,000 And we would anticipate those to be extremely supportive as we move down into that 6,000, unless we see a total risk-off event happen via some geopolitical news or something. So again, most pullbacks should be supportive, and we'll look to get involved on the long side. And then opportunistic shorts might be very difficult and short-lived. But again, if you continue to see a failure at that 60.85 or even a retest of 6,100, you may be able to play a short opportunity for a pullback down towards 60.50. But as of now, with the market trend model, the overall structure, and the sentiment we're looking at, we're really not looking to short the overall market, even on even on intraday opportunities. We'd most likely look to get involved on the long side, again, unless we see a significant change in sentiment, structure, and trend. Yesterday, we identified some key stocks that were around our key gamma delta levels. We posted those on X. Make sure you check those out. Again, our levels continue to work very well for us intraday, as we posted yesterday. So we'll continue to put that out intraday. And yesterday, a pullback towards 59.50 was basically an area that we were looking to get involved on the long side. And then once above 6,000 was a nice move to the upside in the afternoon that we had identified also via our intraday volume and volume analysis command. So with that, everybody, make it a great day. Thank you for joining us. I'll be on for about 3 or 4 more minutes. If anybody has any questions, make sure you post in the chat. Be happy to interact with anybody. Happy to review any individual stocks if anybody wants to go over those. But again, just thank everybody for joining us. And make sure, you check out our weekend newsletter as well as our intraday posts on X. And obviously, you're joining us for the pre-market prep. And make sure you check out our post-market summary that is posted every evening also, where we go through how price interacted with our levels and what we were looking at intraday and how we traded it intraday. So again, thanks everybody for joining us. I'll hang around for 2 more minutes, and let me know if anybody needs anything. All right, thanks everybody for joining us. We'll see you later.